You need to only understand only 3 candlestick patterns to make your trading more effective. So in this video, we're going to cover these 3 candlestick patterns and how they behave in the market. So from here, let's start with the rejection candlestick pattern. On a rejection candlestick pattern, you will clearly see a move to the downside that is very aggressive, and then followed by a move to the upside that is very rejecting. So this candlestick will look like something like a doji with a longer wick, and then the next following price action should be to the upside. So most of the time you have to use this bullish rejection on a, maybe let's say, a level like, let's say you have a break of market structure like this to the upside, and then if price suddenly crosses this line, you have to expect this candlestick pattern to be around this area. Then you will use the lower time frame to make some entries around these areas here. The same thing will apply on a bearish side point of view. You will have a strong move to the upside. This will be a huge candlestick, and then suddenly you will have this candlestick right there. So most of the time, this candlestick will be a bullish engulfing candlestick. I hope you understand what I say right there. Then, if you spot this kind of candlestick pattern, you have to expect that a reversal should be around this area. You have to wait for price to come to this area and then move to the downside. But sometimes it can even cross above this high here and then drop lower. This is what I call a double rejection. It will look something like this. Price will manipulate this low first, and then it will also manipulate this low. And in the previous video, I have covered that this will be the trading time frame. This will be the range of the trading time frame. Okay? This will be the trading time frame around this area. This candlestick. Again, you will be using the lower time frame to find some entries here. But we will cover that when we go and backtest everything. You will see how price is likely to behave. Certainly, again, around even this area here, you can see that we have the double rejection where price manipulate this high, and also around this area here. So let's look at another one here. This is an engulfed rejection candlestick pattern. If you understand this one here and even this one, it's very easy like to make some entries in the lower time frame because the structure will be very, very clear. You will see that the first candlestick right here will have a smaller body. This one will have a bigger body here. This is what I call an engulfed version of this candlestick pattern right here. So in the lower time frame, you will be looking for the market to do something like this to make a correction here. This in the lower time frame, this candlestick that is making the engulfed rejection will have, let's say, some sort of this will be impulsive. This area here will be corrective. And also, you will see that the sell side, the buy side liquidity around this area will be taken by this high here. This high here. So let me show you how in the lower time frame the market is likely to look like. In the lower time frame, let's say this candlestick here, this candlestick formation, you will see that this low here, we have this low, will be this low, and then this high here will be this high here. When price is making this candlestick here, it will create this low here. This will be the low point. This will be the low point of this bullish candlestick. And then the market will break this high here, which is this high. and then it will create this high, which is this high here. And then you will see that price, when it moves down here, it will close around this areas here. This is where the correction will start. Most of the time, the next candlestick will be very slow before the market can continue to the upside. If you remember clearly, we have covered that after every impulse, we should have a correction before the market can move to the upside. Okay? I hope you understand this concept very clearly. This candlestick again, guys, it will create this kind of structure in the lower time frame. So let's move on to another pattern. This one is a simple fair value gap where the market creates a gap between the wicks of the three candlesticks. You will have three. This one here, you can clearly see that we have this high of this wick and then we have this low here. But there is a space in between here. This is where we want the market to come and close the gap before it can continue to the upside. The next thing is that even on a bearish side point of view, you will have this low and then this high here, which create a fair value gap here. And then we will be looking for the market to come and close this before the market can continue to the downside. So another thing is that if we go and backtest everything that you have studied so far, you can clearly see that the market will print out so many candlesticks that are very clear to the naked eyes. So right now, I want to move on and backtest everything. So let's move on and backtest everything. So for my backtesting, I use Forex Tester Online. So from here, let's start by creating a new project because I want to backtest everything with you guys. Let me use let's use the gold again. Let's use gold. We have gold. I'll write gold 2. And then everything is just fine here. And then let's create the project here. We have gold 2. Let's go and backtest everything, guys. You can clearly see that we have price action here. So from here, I want to move on. Let's move on to the 4 hours time frame. From this 4 hours time frame, let me change the color, chart setting, template. Let me use this one here. So from here, guys, I want to backtest everything with you guys so that at least you can understand how the market is likely to behave in different conditions. So another thing is that let's move on to this area. Let's roll back to this date here. You can clearly see that we are on the 4 hours time frame. But if we look at the current price action, as I said before, we have to see this strong move to the upside. You can clearly see that we have a strong move to the upside. But there is no rejection until here. But if you look closely from this candlestick here, you can clearly see that we have a rejection afterward here with this candlestick right there. So let's clear everything. Remove drawings. From here, you can clearly see that we have a rejection right there. We have a rejection. Let me do again. I think I made a mistake right there. Let's increase the pixels. I'll just use this one. It will be very clear. So from here, let's say right now we want to enter the market in the lower time frame. Let me click here. Change the color. Main. from here, we can see that we have the 2 time frames. We have the 4 hours right now, and then we have the 50 minutes. That means in the lower time frame, we will be looking to enter short around this area here. Okay, we are looking to enter short into the market. Change this color to black. Right there, we'll be looking to enter the market short around that area here. So if you understand everything right now, you'll understand that the market is likely to push to the downside after we have identified this pattern here. And we can clearly see that this bullish candlestick on the 4 hours time frame is very strong to the upside, and it's also a bullish engulfing candlestick. So then price made a rejection to show that price is likely to move to the downside. And also we can clearly see that in the lower time frame, we can see that price is moving to the downside very aggressively. And then we have there a break of market structure right there. Let's write it down. Have the BOS right there. Change this color to black. And then you can clearly see that price moved to the upside, broken this high here. And then right now, price is looking like it's moving to the downside. But we have to retrace back to this area. Okay. Hope you understand it right there. So it's very simple to understand this very clearly. So right now, let's play and look at how price behaved. You can clearly see that price is moving to the downside. But then let's increase the speed. It's looking like it's moving to the downside. And this 4 hour candlestick, this is the trading range, as I said before. But in this case, you can clearly see that there is no retracement to this area here. That is why sometimes the market doesn't even play out. Is because the market in that time frame, it will be very fast. So you have to consider that when you are looking to make your entries. And then if this candlestick closes, this one here on the 4 hours, if it closes, that means we won't be looking to enter the market, because we are looking to enter the market right there on this top here. So let's wait and see if this candlestick will give us an entry. But in this situation, you can clearly see that the market is very strong to the downside. Okay. And also another thing is that when we move on to the lower time frame, we will be also looking for the market to fill this fair value gap around this area. You can see a fair value gap right there. We have a fair value gap right there. Let's do something like this, FVG. And we can clearly see that the market is just pushing to the downside until we have this candlestick closes. You can clearly see that right now the candlestick closed and price just moved to the downside very aggressively. So there is no point in entering the market because we don't have an entry right there. So let's try another example and see if price will give us something to trade on. I want to show you some few examples. Here we have a perfect example right there. Let's roll back to this date here. You can clearly see that right now we have a break of market structure right there. Let's make this very visible. And then we have this low here. And we can see that price is moving to the upside, but very slowly. So in this situation, you can consider that, okay, price almost closed this fair value gap. We have this fair value gap right there. You can clearly see that we have a fair value gap right there. But price failed to close it almost slightly by a few pips. But the only thing that we need to consider is that, okay, we can try to move on to the lower time frame and try to enter here. So we can try to enter right there. So let's move on to the lower time frame and compare them side by side. Let's use the 1 minute time frame. So in the lower time frame, that means we will be looking to enter the market around this area here, on this line here. So let's change this color to make it perfect. So when price touches this line, that is when we will be looking to make an entry. But let's look at how they can behave. Can clearly see that this was very, very fast. Let's roll back again. Can see that price moved to the downside. And then when the next candlestick on the 5 minutes, it touched, but very slightly. If we move on to the lower time frame, you will see that price is very clear. You can see that we have touched here. But we don't have a perfect entry. We can try to use the 1 minute time frame to see everything very clearly. We have this bullish move to the upside, and then price is moving to the upside. Okay. Here, this is when you should look for an entry. And you can see a lot of, we have a rejection candlestick here. So we can roll back to this area. Roll back. Let me do something like this. Yes. We have this area here. And then you can enter the market short around this candlestick here. It's just that price was very, very quick to make the sell. But let's try to make an entry around this area. We can place a sell, new order, and then it depends on your account size. Let's use 0.20, and then we sell, stop loss, take profit. We can make our take profit levels right there. Let's place take profit. Always I like to target this lows here, and then stop loss above this highs here. So right now we can play it through, but the only problem is that this next candlestick stopped us out because our stop loss was very, very tight. The only problem that I see many people do is that they put their stop loss very, very tight. But if we roll back again, place the order with the stop loss and the spread size in mind, you can clearly see that this is the spread size. Let's place this order once more. New order, place a sell, and then we put the stop loss above this rejection candlestick here that is on the higher time frame, and then we put the take profit below, because you are trading the 4 hours rejection in mind. I know you'll be likely trying to make a stop loss very, very low, but right now if you look closely, price is behaving perfectly fine. And then if you don't want to waste time from here, you can just make the, if you don't want to waste time, if I may say, you can just click the order, jump to forward to order close, and then you can clearly see that you have backtested, but you didn't even waste so many time like that. You can see the entry and the stop loss, and then if you click on the history, you can see everything right there. It's very, very simple. And another thing is that there's a lot of features that this platform is offering that I like to use. And right now, they are having a special right there. This is a lifetime, guys. And then you'll be backtesting a lot of things very quickly. And then you can have so many strategies that you can backtest. And then if you register using my link in the description below, I will be selecting only 5 people to try it out for 2 months. So register with the link in the description below. You will be trying out for free for 2 months to backtest your own trading strategies. Okay, I hope you understand it. And they're offering yearly and the lifetime. But I prefer the lifetime because you pay once and then forget about it and backtest so many strategies very quickly. So register in the link in the description below. So right now, let's move on and try another example. So right now, we are going to find another example. You will understand everything very clearly. But this thing is distracting me here. Let me just views order history. It's fine. I'll come back to it in a little bit. So here, this is where the double rejection was available here. You can clearly see that price here, it traded below this low, and then it made a rejection here, but then followed by another rejection. If we move on to the lower time frame, unfortunately in this situation, the market manipulated even this low here. But if we move on to the lower time frame, you will see that price action will be very, very clear. Let's look at the lower time frame and see how price behaved in this situation. Because we are on the 1 hour, let's do the double layout here. Let's move. We have this low, so let's play it out and see how price behaved before it can break this low. You can see that we have a huge candlestick. We have the first rejection around this area, but unfortunately you'll be stopped out immediately. And then here is the kicker. We have another rejection here. We have another rejection right there. Let me do something like this. So if you have taken the trade right there, this one could have resulted in a loss. Even this one. But this one could have given you a huge stop loss because this is very, very bad. But unfortunately, if you are trying to make the entry on the retracement, you can enter the market right there with the retracement and then wait for the market to move to the upside. So in this situation, you'll be on break even because price traded above two highs here. Obviously, you'll be on break even with this trade. So when that move happened, you will be on break even, and then here you can take profit right there when price crosses this line here. So you'll enter the market and then move to the upside. So there is no way in this situation you could get out in a loss. So let's move and see how that move behaved when price manipulated again that low. You can clearly see this was very, very quick. Let's look. We have another rejection here. Obviously, you could have taken profit here, and then if you spot this one is the engulfed version of the rejection. You can clearly see it here. Let's roll back from here. Roll back. Okay, let me do something like this. You can clearly see we have the rejection and then also followed by some sort of retracement. You can enter the market right there and wait for price to move to the upside. Only if you spotted this move here, but this was very, very quick. And you can clearly see that when you backtest, you can clearly see the candlestick forming in real time. So you won't even waste time practicing so many strategies. And this will help you to understand how a candlestick behaves. Because you can clearly see this one here, it rejected first very quickly and then retraces and then move to the upside. You'll understand this kind of candlestick patterns when you move forward with the backtesting. So from here, let's look at another example because I want to do a few more before I end the video. And another thing that I want to point out is that if you're trading the news, this is perfect. Let's click on the news right there, view all news. Let's say you trade the CPI. You can go back, go to 15 minutes before CPI. You can clearly see that this is where that move was happening here. This is 15 minutes before CPI. And then if we play it back, you can clearly see this. This is 15 minutes before CPI. And then let's move on to the lower time frame and clearly see. Or we can go back to, let's say, let me check, upcoming. Okay, let's go to the exit time. Can clearly see when the CPI, it was happening, it was doing something like this. And obviously, this will help you to understand the move very perfectly. And we have talked about this move, this candlestick here. This was happening during CPI. So you can backtest every move before it can even happen and understand. If you want to trade the news, you can understand how the market is likely to behave during news event. Okay? I hope you understand everything right there. So the only thing that I wanted to share with you with this video is that you have to understand the rejection candlesticks and their behaviors in the market. So even on this area, let's roll back here. This is the 15 minutes. You can clearly see that we have the sell side liquidity that was taken. We even have the buy side. But if you look at this move was very impulsive. And then we have the correction, which is very, very slow. And we can see that we have a demand zone. But if we look closely on the current price action, can clearly see a strong move to the downside, followed by a rejection candlestick. So you'll understand how the market is behaving in this situation. So you can clearly see that this is very simple. If you understand those moves that will be happening in the market. And there's a lot of rejections that you can trade. Let me show you an example. This one is very powerful. The one that is happening very late like this. You have a rejection like this. This is very, very powerful. And you can enter the market here on a retracement. And if you look closely, this candlestick is very big. This one is very rejecting to the downside. You can still enter more and can clearly see on the current price action, price moved like that. That is why you see this move to the downside. Hope you understand it. There's a lot of rejections that you can spot in the market, like this one, even this one here. You can clearly see that after this candlestick here, we can see that this one looks the same as this one here. A move to the upside and then a rejection. That is why you see this move to the downside. This is the 50 minutes. You can enter the market right there on the close or wait for a retracement. It just depends on how you want to trade it. And also, you can see another rejection, but this move to the downside was very corrective. So, and also is that you can see a move to the upside like that, like this to the upside, that is very strong, and then start to correct like this. You should get out of that market because you are likely to be stopped out by this move, because this will be a correction that is going to form again. It's like this. Every time when you see a move to the upside, and then let's say you enter the market right there, you see a correction like this. That means the next move should be very impulsive. The only thing that you need to focus on is on this area here. Okay, I hope you understand it. And another thing that I want to point out is that the last move is very, very aggressive. It will look very impulsive. Like let's say right now, you have a move to the upside. We have this low. We have this correction like this. This last move here will look very impulsive here. This move will be very impulsive. It will be very strong. That is why you see a rejection that is forming around this area before you can see a move to the upside. Even on this area, if price want to go back down like this, price will break this, but the last move here should be very aggressive because it will be collecting so many orders. Like on this area, remove all the drawings. You can clearly see that we have a move to the upside like this. Let me roll back like that. You can clearly see that we have a move to the upside like this. This is very strong to the upside. But if you look closely, you'll see that we have a rejection around that area. And price was just completing this correction right there. That is why you see a move to the downside. That is very aggressive. Okay? I hope you understand everything in this video, but we will do a follow-up of this video again some other time. So don't forget to register to try out the Forex Tester Online. There's so many features that you can use, so many features that are even better than TradingView. So if you test it out, guys, you'll love it. You'll love it. You'll test out so many strategies. I even scratched the surface of the features that are available in this platform. So in the next following video, we'll cover some other features and build up a trading strategy for CPI. For those who want to trade CPI or even NFP, I'll build up a strategy and test it with you guys and have some results for you guys to see them. So I guess I'll see you on the next video. Stay safe. Always use a stop loss. And also don't forget to subscribe to the channel and follow me on Discord and Telegram.